Move that we saw today, I believe, sets us up for the road to triple digit silver. And I want to start off today with this post that I put on X over at x.com/stacksmarter. I posted this morning, silver ready to take another crack at a breakout from this flag consolidation. $60 silver by weekend looks like a real possibility here. You can see I posted this at 8:25 a.m. this morning. Now this, I will say, this aged rather well, because here's the chart of silver. We didn't have to wait to week's end. I mean, it was basically at market open right after that tweet went out that silver absolutely surged up past $60. Now we've got several charts that I want to take a look at here and discuss why this is so important, why the entire precious metals complex looks set up for significant further gains. But I wanted to start off with that just to tell you, listen, go follow me over at X at x.com/stacksmarter. And you know, sometimes in the comments on these videos, I hear a lot of criticism of technical analysis as applied to the precious metals. People say, oh, you're just drawing lines on a chart. You know, why don't you go read some tea leaves or some bones? But the reality is the technical analysis is a useful tool. These patterns are meaningful. They're just a visual representation of market activity, and they do have some utility in forecasting what is going to come next. If you're interested in getting your hands on some physical silver before the price heads to $100, not financial advice, by the way, it's just my take on where things are heading, then you should check this out. Introducing the first ever 5-ounce silver maple leaf coin from the Royal Canadian Mint, a historic release with an iconic design that is available in a stunning 5-ounce format for the first time ever. Don't miss your chance to own a piece of minting history, available exclusively at stbullion.com. Okay, so yeah, those are super cool. ST Bullion exclusive 5-ounce silver maple leaves. Anybody who stacked those on their release, probably pretty happy again, because we are over $60. Now let me just take a look at this silver chart, kind of break it down. Then we'll look at gold, some of the other metals, some of the miners, and some of the factors that are driving this. But this is all very important because we're really starting to accelerate the bull market here in silver and the other metals. So first of all, this is the 4-hour chart. If you've been following the channel for a while, you know we witnessed silver breakout from this big ascending triangle. That happened back at the end of November, and then we had this consolidation. This is a classic flag consolidation pattern, by the way. This is the flag pole, and then you get the flag, and this is a bullish continuation pattern in technical analysis. And then what has silver done here? It has broken out, and it's likely headed to, I would say by year end, $70 is a reasonable price target at this point. I mean, it only took, to go from 50 to 60. That was not that much time, right? That was back on the 21st of November that we had silver under $50, and now we're over 60. So certainly, less than a $10 gain from here to take us to the $70 level. Ultimately, I believe this is going to take us to triple-digit silver. The RSI here, the Relative Strength Index, a measure of how overbought or oversold silver has become here, is at 74. You can see that back in mid-November, it rose as high as 87. So the RSI still has plenty of room to move up. That's what this oversold condition has done here. It has allowed the moving averages to catch up. It has allowed the market to digest the big gains in the silver price. Now we're ready for the next move up. That's what you're seeing today. We've got a positive MACD cross. The blue line here crossing the signal line, that is a positive development. That often coincides with the start of one of these moves. I find the 4-hour chart MACD cross a useful tool. It's a little more predictive than reactionary than, say, like the 1-day chart. Let's take a look at silver futures. So we have got the same action not as neat a flag maybe, but basically the same thing. We got a breakout up above $61 now on silver futures. So $8 and change to go to hit that $70 level. Another thing I want to point out about this silver chart, I mean, there's so many bullish factors here. If we do a little drawing here, we can do this, which is an interesting chart. There's also, in this ascending triangle that silver broke out of, we've got a little mini cup and handle, which is a very bullish chart formation as well. We got the breakout from that back at the end of November around the Thanksgiving holiday. And so, you know, there's a lot of very positive things from a technical standpoint here when we look at silver's chart. I can't really leave out this. I mean, it bears repeating, right? Let's see. Let me reset this view here. Yeah, this major cup and handle that silver broke out of, you know, it goes back to 1980. This is the 3-month chart. So technically on the short term, on the long term, everything is set up for a huge move in silver here. And it may be hard to believe with silver over 60 bucks, stackers out there. I mean, you've never stacked silver at this price before, but when you account for inflation, when you account for all the fiat currency creation since, you know, 2011, since 1980, silver is still very cheap. And that is part of why the nominal price is headed much, much higher, but it's also headed a lot higher relative to other assets. So look at this. This is the gold to silver ratio chart. Let's look at the 1 day here. And you can see that this too is shaping up to be very positive for the silver price. Remember, as this ratio declines, that means that silver is outperforming gold. Now, it topped out here in April of 25. I was stacking a lot of silver at this time. Go back and watch the videos. If you're a long-time channel follower, hopefully you were stacking too, because I mean, look, I don't give financial advice, I don't tell people what to do, but I did point out many, many times that a gold to silver ratio over 100 was an indication that silver was incredibly cheap. Now, silver's still cheap. It's not as cheap as it was in April. Now, we had this bear flag, right? So this pattern that traded within a range that broke down from that. Since that time, a clear downtrend has been established, right? This is headed much lower, means silver is going to continue to outperform gold. Now, that could mean that if the metals drop, silver doesn't drop as much as gold, right? Or if maybe silver stays where it is and gold drops, this ratio would go down too. But I don't think gold's going to be dropping anytime soon. I think what we're going to see is both metals heading up. You're just going to see silver head up faster, right? That's what happened today. You can see over here, silver up 4.3% today. Gold up, it's a green day, but it's only up 0.4%. So that's why the ratio is plummeting. What we had here was this descending triangle, a very bearish technical pattern. The gold to silver ratio broke down from that. It was consolidating also in a continuation pattern, but this continuation pattern is in a downtrend, right? And today we saw that consolidation was over, so the downtrend resumed. And that's what we're seeing on the chart of the gold to silver ratio. This ratio is headed much lower. That is my forecast. If you zoom out, go to a weekly chart, you'll see that this is the first time, gold to silver ratio right now at 69.39. It's the first time that the gold to silver ratio is below 70 since July of 2021. So it's been a while that silver has been underperforming gold. That appears to be changing now. And you can see that when this does decline, like this is the COVID peak right here where it got up to about 120. That was when oil was negatively priced and silver was at like 12 bucks, you know, just crazy out of this world pricing. It spiked up and then it absolutely collapsed, right? Because silver had a huge rebound from that. But when you see this can fall quickly, right? So same deal in 2011. It kind of consolidated here. You can see that there was a consolidation of the gold to silver ratio. It was trading within this range, and then it plummeted as that gold and silver bull market peak got down into the 30s. So we still have a long way to go when it comes to the gold to silver ratio, but it's definitely confirming that it is in a downtrend today. And I think this is going to go much lower. That's why right now I'm primarily focusing on silver versus gold. Although, I mean, at this point, any tangible assets I think are going to be very positive to have in your possession. Let's look at the gold chart. So here's the gold chart. This is the daily. And actually, we can look at this old consolidation. So going back to earlier this year, this is how this bull market has worked, right? We get a big move up, then we get these consolidations and breakouts. So we just broke out of this symmetrical triangle consolidation that formed off of the highs from October when gold was around 4,400 bucks. And we broke out of that. Now, just like, so going back to silver here briefly, just like silver formed this flag, which it broke out of today, gold is also consolidating following its breakout. It has not broken out yet. I suspect that is coming. I think silver is just leading here, and we will see fresh record all-time high gold prices in the near future as well. Is it going to be by year end? I don't know. It certainly could be. I would not be shocked to see gold above, say, $4,500 come, the new year. Not guaranteed. Nothing is in the short term, but this is pretty bullish here, this chart. Just a consolidation. We're going to see a breakout from that as well, I believe. Let's look at, I want to look at platinum. Platinum, looking very much like silver here. So platinum was in this consolidation, and actually, you can see this a little better if we switch to a 4-hour chart, a little more detail here. But you can see it touched that trend line many times. Kind of had a false breakdown there last couple of days. False breakdown, but then what we got today was a breakout from this. So platinum likely heading much higher as well. Palladium, I guess I don't have anything drawn here on the palladium chart, but you can see it's pretty much the same story if I just connect those two peaks there. It looks like we're breaking out on the palladium chart today as well. So all a very bullish portent for the precious metals. I think palladium and platinum have a lot of catching up to do. Platinum, if you remember in 2008, the gold to platinum ratio was like 2 to 1. Now it's the inverse of that, but even more so, right? Platinum at 1,700, gold at 4,200. It used to be with the old ratio around, 2008, I think, when platinum kind of had its blow-off peak. The ratio was... in platinum's favor there. So for 1 ounce of platinum, you could get an ounce of gold. Yeah, if we see back, like right here, where it peaked above 2,000 bucks in 2008, and the gold price was less than half of that. So platinum, very cheap right now. That's my take. So, the white metals, silver, platinum, palladium, all bargains at the moment. Despite the fact that they're breaking out, they're still cheap. Just my take. Let's see. Let's look at the miners here. Let's switch to a daily chart and we'll look at the miners. So this is the SILJ ETF, the Junior Silver Miners ETF. Let's put the indicators back on. I like the MACD and RSI. Those are the two probably most useful here for me. And let's go to the 4-hour chart. Yeah, we're getting a bullish MACD cross here. It looks like we're about to. RSI still very low at 61. We had this lengthy consolidation following this October high in the SILJ, broke out of that. Now it's consolidating just like silver was. Hasn't broken out to the upside yet. That's coming, I suspect. These indicators are, very bullish looking. And look, nobody knows what's going to happen in the short term. Forecasting, and I don't like using the word prediction, right? I like using the word forecasting because that's kind of more what we're doing here on this channel. It's not about knowing exactly what's going to happen all the time. It's just about probabilities, right? That is sort of what we're discussing here is probabilities, what's more probable. And to me, further positive price action across the precious metal space is the most probable outcome here. Now, what's it going to look like on the day-to-day? Well, sometimes, you nail it, like with this tweet, an hour before the breakout occurs, but that's pretty unusual, actually. That's kind of more of a one-off. If you tweet about silver enough, eventually you'll be right like this, I would say, is kind of the way to look at it. And there's sort of a survivorship bias there where I'm not going to talk about the tweets where I make incorrect forecasts, right? just to, be realistic here. But the odds are that the metals are, I think, moving higher here. Let's look at the GDX. GDX, same story. Breakout from consolidation. Still, the record all-time high for the GDX took place back here in October. So I think that this senior gold miner ETF, when it breaks out and starts taking out new record all-time highs, that's going to be some very significant moves. Silver is sort of like leveraged to gold in the sense that it moves faster. Well, the miners are even more so, right? The miners have the potential to make huge moves here. And if silver's cheap, I think the miners, personally, is just my take, are even cheaper. And yes, I know for the stackers out there who are complaining about paper derivatives, you're not entirely wrong. I mean, you certainly want to hold a core position in physical metal, like those, 5-ounce Canadian maple leaf coins that SD Bullion has, or whatever you like to stack. 100-ounce bars, silver rounds, 90% junk silver. That stuff's still on sale, right? A lot of places you can get that at spot or below spot right now because retail investors haven't really gotten on board for this whole shebang yet. And when they do, I think that the premiums on retail bullion products like those coins, rounds, and bars are going to go up. Right now, it's still kind of a buyer's market. There's going to be higher spot prices and higher premiums. You can bookmark this video. That is my forecast, not prediction. Let's see, what else? Let's look at the M2 money supply to silver ratio chart. This is one that we've been looking at recently. And I pointed out not too long ago that this had breached this support at this trend line. Well, this ratio continues to plummet. And, to get back to the 1980 ratio here of fiat currency to silver price, you would need something like, I think $700 silver is the price we had discussed in that video. So that's interesting. I want to talk a bit about the Fed, but first, I want to give a shout out to a viewer who signed up to accept goldbacks. There's a link in the description of this video. I think it's titled like how to get free silver or something like that. You can click that and you can see this video about how to sign your business up to accept goldbacks. Well, Demers Boxing is a viewer, and this I thought was interesting. If you want to understand why I'm giving him a shout out and how you can take goldbacks at your business and how you can get some free silverbacks for doing that, check out the link down in the description. I'm not going to get into that now. There's a full video on it that you can check out if you're interested. But this guy I thought was very interesting. Demers Boxing, I'm assuming this is like a boxing gym where they teach, pugilism. But he's in Canada and he signed up to accept goldbacks. So that's pretty cool that even in Canada, if you want to learn how to, box, you can pay with sound money. It doesn't have to be in the US. So it just shows that goldbacks are a hard currency that kind of transcends borders here, I guess, all of North America. Let me know in the comments if you've ever paid with goldbacks. I'm kind of curious about that. And shout out to Demers Boxing. I mentioned that anyone who would sign their business up to accept goldbacks and put me as the referrer, so we each get our little promo, which you can learn more about in the description, with the link to the video in the description, I would be giving those businesses a shout out. So shout out to Demers Boxing. I still haven't received my silverbacks. I think maybe there's a little production delay or something with those, so there's no guarantee on the timetable and when those will go out. But if I do get a silverback for you signing your business up, I'm going to give you a shout out in one of these live streams or videos, or I'll do my best to get to everybody. Quite a few businesses did sign up from that video. But anyway, enough about that. Shout out to Demers Boxing. You want to learn how to box, go check them out in Saskatchewan. All right, so tomorrow is the FOMC meeting. The Federal Open Market Committee. They determine the federal funds rate, interest rates, that sort of thing, give us an idea of what the Fed is thinking about the economy. The press conference, we're going to hear from Jerome Powell, so we'll know the latest update or what the Fed wants us to think that it thinks about the economy. You know that there's a lot that goes into what the Fed is going to present there because they know that it affects markets significantly. But right now, markets are largely pricing in another rate cut tomorrow, 25 more basis points. I suspect that's what we're going to get. The markets would likely experience significant turmoil if the Fed didn't deliver that. So they will deliver what the market is expecting here, more interest rate cuts. Now, this is just the beginning. This is important, right? And this is part of why silver is moving, because now it has become clear that the Fed is going to be cutting tomorrow. So that's going to be good for hard assets. It's going to be good for gold, silver, miners, platinum, palladium, copper, commodities across the board, base price of everything, right? Because it's going to mean more fiat dollars in the system chasing the same supply of goods. In the case of silver, it's actually a shrinking supply of goods because there's an ongoing annual silver supply deficit. But the point is that the Fed is going to be cutting tomorrow, right? Now, they're going to talk about inflation. They're going to talk about the job market. They're going to talk about everything but the real reason why they absolutely must cut these interest rates. Just watch the press conference tomorrow, and you're going to hear them talk about how, the economy, they'll somehow paint a rosy picture about the economy, but then tell you why they have to cut interest rates, even though stock markets are near an all-time high, even though precious metals are near an all-time high, gold's over $4,000, silver's over $60, but the Fed's got to cut. They need more money pumped into the system. They're not going to tell you about the national debt and how this is approaching crisis levels, 38.458 trillion now. That's, a lot of debt. It's an unpayable amount of debt, unless you pay it off in devalued currency. That's why they're cutting. That's the trick, right? You can pay off any amount of debt when you have a printing press and you can debase the currency. And when they inflate the currency away, who benefits? Well, owners of assets benefit because of asset price appreciation. That's why I want to own silver and other assets. I just particularly like silver because it still seems so massively undervalued, whereas the price of most other things is high, right? It's a high price. Silver, even though it's moved up, it still has a lot of room to move up. But the other beneficiary when they debase the currency is debtors, right? Because if you owe $38.4 trillion and then the value of the dollar goes down, well, that helps you out, right? It diminishes the value of your debt that you have to pay. So this is why they are debasing the currency, although they're not going to tell you that. And this is a document. This is from the monthly Treasury statement. I try to look at these when they come out. This one was a little delayed because of the government shutdown, I believe. But this is the Treasury statement for October. This is the first month of the fiscal year, the new fiscal year. And you can see that total receipts, $404 billion, total outlays, $689 billion. So that leads to a deficit of $284 billion. Now, if you just annualize that, that is north of $3 trillion annually. So what does that mean in 2026? How high is the national debt going to go? Well, I mean, if you annualize that deficit, that would mean that this is going to be well over $40 trillion by the end of 2026. Now, there's no guarantee that the deficit's going to come in at that amount. You can't just take 1 month and annualize it, but it kind of gives you an idea of the path that we're on here, right? I wouldn't be surprised if, the deficit for 2026 is over $3 trillion. That wouldn't be surprising at all. I mean, the deficits are expanding. The geopolitical situation is not getting any better, right? So that's a constant reason to boost spending. We've got soaring deficits, and the problem is also that the interest cost on this debt is beginning to rise, right? It's already over $1 trillion. The more they borrow, the higher that goes up. It can become an exponential thing. This is also why the Fed is cutting. It's also why the Fed is ending its program of quantitative tightening. That's where the Fed, which has treasuries on its balance sheet, sells treasuries to shrink its balance sheet. The problem is, the Treasury also sells treasuries when they are borrowing money. That's how they do it, right? They sell treasuries, they get the cash, they then spend that, and then they have this obligation to pay that debt, which the way that it works is they just borrow more money to pay the existing borrowers, which, if you were a private citizen doing that or a business, it would likely be considered like a Ponzi scheme. But I guess when you have a central bank and stuff, it's not a Ponzi scheme. No, don't worry about that. The problem is that when you sell too much of something, especially in this case, treasuries, the interest rates tend to go up, right? Because you have to raise the interest rates to entice more buyers. But that means the debt service cost of the debt goes even higher. So how do you fix that, right? Supply and demand. So if you're selling too many treasuries into the market. And that's making interest rates go up. You need somebody to buy a bunch of treasuries. Who is that going to be? Well, it's going to be the Fed. They're going to begin expanding their balance sheet again sometime in the near future. That's just my forecast, my take on things. I don't have any concrete evidence to suggest that, except the math behind the debt, that if they want to avoid a cascading debt crisis and a forced default basically on the debt, they're going to have to default by another means, which is by paying this off in debased currency. And why am I talking about this ad nauseum? Well, it's very important for the price of hard assets, including gold and silver. Here's that long-term chart again. So, this is where you are right here. Let me draw a nice big arrow there. This is where we are here, okay? An incredibly bullish point. And this is where the Fed is cutting rates. This is where the Fed just ended their program of quantitative tightening. And if I'm correct, they're going to begin QE again sometime soon. I would say by the end of 2026 is a conservative figure. Could be a lot sooner than that. And that means that days like today, when we've got silver up $2.51, silver futures up $2.75, we're going to have more of these days. Now, is it going to be volatile? Yes. I wouldn't be surprised if tomorrow we see a correction in silver after Powell says something maybe that markets don't like, or you get some kind of a buy the rumor, sell the fact dynamic. But what I will say is that as far as short-term stuff goes, in my opinion, dips should be bought, and they will be short-lived, and they will likely not be that deep, and they will be opportunities to acquire more physical metal or whatever paper derivatives of silver you happen to want. That's what this means. And as far as triple-digit silver, that is just a logical consequence of where we are headed. This chart, I mean, this is the money supply to silver, right? As I mentioned, to get to the 1980 level, you'd need like $700 silver. If you want to get here, you need like $150 silver, I think. Yeah, it's a little less than half of where we are on the ratio. So $120 to $150 silver to get back to the 2011 level. There certainly were no Hunt brothers back in 2011. And think about how much worse the situation is now compared to 2011. I mean, in 2011, the Chinese were still buying U.S. debt, right? They're not doing that anymore. We still had the dollar, that had not been weaponized, right? So it was a lot more desirable back in 2011. So much has changed. I think we had like 11 trillion in debt then. Now we've got 38 trillion and massively accelerating to the upside. So this chart just shows you that I think $100 is just going to be one stop on the road up. But again, it's not financial advice. I'm not telling anybody what to do. That's not what this channel is about. I'm just sharing with you my forecasts, not predictions. If you have a price target for year end, which is now just a few weeks away, do me a favor, leave it in the comments. Go follow me at x.com/stacksmarter and make sure you subscribe to the channel. A lot of viewers of this channel are not subscribed to the channel yet, something like 80%, which in my mind is crazy, but you should subscribe because this is a space where there's going to be a lot of very interesting developments over the course of the coming weeks, months, and years. It's really starting to heat up. So if you want to get more updates like this one, make sure you click the subscribe button and the bell notification. Share this stuff on social media. You'll be doing people a favor when they learn about sound money. Thanks for watching, everybody. Stay safe and happy stacking.